ladies and gentlemen, and welcome to the latest weekly report for the week starting the 19th of January 2015, just covering the week that has just passed there. As we're talking about finance, must inform you that does involve risk of loss, may not be suitable for you, and all advice is of a general nature only as well. Okay, so let's have a look at the index first up, and I'll just flick it over to a weekly view, and you can see quite clearly there with the red candlestick on the right that it was a negative week after one solid positive week in mid-December, and then a slow rally after that. Looking back at the daily chart there, zooming in, you can see a little bit more detail. We did have quite a drop on Friday, but you can see there that we recovered to pretty much 5,300 after falling as low as 52.67 earlier. But yeah, the market, whilst it was looking at breaking above these levels back in mid-December, looking like it was going to break to the upside, looks like it has turned out into a false breakout, pushing down, testing up again, and now pushing downwards. But having said that, quite some obvious tails to the bottom of the candlestick body, which indicates that intraday that the buyers are wrestling back control and pushing the market up. So it's a very interesting market at the moment, and it's been quite a challenge looking back. Okay, sort of mid-May and June, it was a bit wishy-washy, but then we've seen through August, September, October, November some nice trends develop, and then we're sort of doing the 1 foot forward, 1 foot backwards movement at the moment, which makes it just a little trickier to trade, especially if you're trying to use these directional strategies back in September, October. And what were the issues pushing the market this week? Well, crude's in the news again, hit a new low, hitting $44 US a barrel, which is translating into lower petrol price. I'm sure you've noticed for those that of us that drive a car. We've also seen Eurozone issues come back, but that was more so last week and earlier this week. So quite a few different issues. The other big news event, although with a bit more of a limited impact on our market, was the huge crunch in the cross rates between the Swiss chief and the euro and US dollar. So what happened there was that the Swiss bank stopped applying its cap of 1.2 over the euro, which it has been defending that rate, and perhaps just ran out of money. Perhaps they thought it was just a bit in vain, but having let that go, the currency really surged some 25% overnight, which some analysts are equating it to a overnight 10% interest rate increase there. So there'll be quite a shock move there, and something that we don't see all that often. Although recently the Russian ruble also had a similar effect, although to the other side, with it dropping. Now, looking at covered calls, really only had one adjustment this week, and that was on the Macquarie trade, where we bought back our sold call options. Probably do the same on Monday with QBE. AMP hasn't fallen as much. BHP still under $31, so we are capital protected there, but hitting a post-GFC low. I've actually got to go to a 10-year chart to see, because 5 years just cuts out. But yes, that post-GFC low where we actually saw it go down to $20 during the GFC, and within a year later it was already up at $40. So there you go. Don't think it's going to happen again this time. There's different forces at play, and it looks like all the suppliers of raw materials, both base metals and crude, have supplied the market, and they're now more or less at saturation point. Okay, let's have a quick look at Macquarie, because we did an adjustment there. With Macquarie, okay, you can see it's hit, still testing those lows, not quite the year's lows, but around that $55 mark. There's a bit of support there. That's where it bounced last October. Had a huge rally up to 62 after that. That'll be nice to see that. But having said that, off this low, we bought back the sold calls, and I think there was about $160 profit there per option. So that was good to bank, and still targeting a move back up to that $59, $60 mark to lock in our overall profit. AMP, just quickly, because there's no change there. It has been dropping away, but that call option hasn't depreciated or devalued that much as yet. And QBE, also somewhat similar to Macquarie, testing the 12-month lows there, or close to it. It actually had an intraday low. It had a really shocker day yesterday amongst the market. Well, it's really been the banks that have been sort of hit this week. I mean, the resources have as well. To a limited extent, BHP got hit more, but some of the crude players actually rallied earlier in the week before falling back to where they were prior to the lift in prices. All right, let's switch over to spreads now, in particular. So now Santos, no good news here, unfortunately. Had to act a little bit earlier here because we had American options. I was keeping an eye on the overnight exercises and assignments, and 975s were already been assigned on Monday. So with our sold 925s, obviously they're deep in the money. There is a risk of that they'll be assigned, and then you have to deliver stock, and it just gets really messy. So picking the bottom of crude in early December, whilst at that point I think it was around the $50 to $60 mark. Obviously didn't work. So crude it's going to be quite volatile for a while yet, but until we see a trend in place, I think we might just stay out of that space, because small movements, 50 cent up and down in a high volatility environment, make it actually very difficult to trade. Whether you're trading CFDs, likely be stopped out, and with options, the volatility increase means that the spread isn't actually that sensitive. So interesting days at the moment, but that Santos unfortunately closing at 49 cents out of 50-cent spread, so there was 1 cent saved there from our maximum stop. What else do we have? We did an adjustment on CBA, because that finally fell to where we're looking at, and at the moment it was, at the time of rolling it, it was in about a 8 to 10 cent profit, about a 20% profit. Nothing spectacular, because still a bit of time to expire. We had the $84, and we sold the $83 puts. So you can see after stubbornly spending 3 weeks above $84, it's finally pulled back, and there's a bit of chatter about lower growth potential on banks, in particular. Looking at the US, there's some downgrades there on earnings, but also locally there could be a higher impost on capital reserve ratios for banks, which will see their costs increase. So perhaps a little bit of that chatter pushing Commonwealth Bank down. Now, with the reason why we did the roll is, okay, at the moment we've got 2 weeks left, or about 1.5 as we speak. Now, if it continues down, then that's good. We can still lock in our profit. But if it bounces from here, it's unlikely we'll have sufficient time to see a pullback in time. Whereas by rolling, we did it at about a average 1 cent credit there on the spread price. At least by rolling, we now, instead of having 2 weeks, we've got about 6 weeks for that to play out. And for those that were in the Wesfarmers trade, there's a similar case. I can't remember what month it was, whether it was this drop or this drop here, but basically it started to see it fall. Actually, I think it was this one in November, and we rolled it because we're quite close to November expiry. I think it was on this day. Starting to move into some small profit, but then as it turned out, the stock collapsed by another 5%, and then we were able to take profits on the rolled spread anyway. So look, if CBA drops another 5% over the next week, we'll be very happy indeed. What else do we need to cover? Let's just have a look at Newcrest. A little bit of flight to safety, and it's a little bit odd because no one in the last couple of years has thought that that Newcrest has been anything near safe. But you can see there it's pushed into almost a 2-year high there, price we haven't seen since about August 2013, which was after that initial bounce from that significant drop from around that $25 mark to about $9 in early 2013. So looking like it's turned the corner. The improvement in gold price obviously helped, but there must be something like a re-rating or something behind it, because it is quite a unusual price movement for Newcrest given where it's at and the problems that it's suffering. So I'll wrap it up there. I realise I've gone a little bit over time there, but a bit more information coming through this week, and looks like the markets are finally waking up after the post-Christmas quiet period. So we've got an interesting week of trading ahead, and hopefully we can lock in a couple more profits, particularly with CBA. Alright, wrap it up there. Have a great week, and we'll talk again soon.